Hey, what's up guys? John here. Breaking news with residential real estate. Blackstone, the company that founded Invitation Homes, who is now the largest landlord in America, is getting back into the rental housing game. They just bought a company, this just closed today, for $6 billion. It's 17,000 single-family homes. 17,000 single-family homes. They believe that the real estate market obviously is going to maintain its stamina, but they believe that rental housing is the future, as well as a lot of other companies are supporting that thesis. In this video, I'm going to break down what they're doing. I'm going to read through this article and go through it and give my forecast where I see this is all going. Please smash that like button when you do. It's really going to help share this content to educate more people that are on the fence with either buying, renting, or possibly becoming an investor and buying multifamily real estate. So let's begin. So Blackstone bets $6 billion on buying and renting houses. You know, the good thing about renting houses nowadays is due to technology and the easy ability of just simply managing properties. You don't need the big infrastructure that you would have needed 5, 10, 15 years ago. It's just, you can have automatic payments online where the tenants are simply deducted right from their account, like an automatic transfer. And all requests can simply be submitted online. You don't need a hard office location in every city across America. So this is going to allow the home rental business, that model, to expand and make it much more profitable for the investor. So the deal, Home Partners of America, owner of 17,000 houses in America, signed again today. Blackstone Inc. has agreed to a company that buys and rents single-family homes, a $6 billion deal. The sign Wall Street believes that the housing market's going to remain hot. This investment firm confirmed Tuesday that it has reached a deal to acquire the 17,000 houses throughout America and rent them out and offer its tenants a chance to eventually buy. The deal has been reported earlier by the Wall Street Journal. U.S. home sales soared last year at the fastest pace in 14 years when the low mortgage rates and the rise of remote work during that pandemic sent buyers scrambling to find larger living spaces. So the company that Blackstone bought, their business model was that they were buying properties and then they were offering the option or alternative for the tenants to go ahead and buy these properties. Blackstone's business model is going to be to take over these properties, remain in control, and rent the properties. And as we know, rental rates will likely just keep going up, up, up. The lack of home sale relative to demand and record housing prices have slowed the pace of home sales in recent months, but on a historic basis, the market remains red hot, and analysts say demand for millennials entering the prime home buying years is expected to fuel demand for years to come. The median price for existing homes topped $350,000 in May. Just in Southern California, home prices have appreciated on average 25% in this last year. That's how crazy things are right now for people trying to break into the housing market. The National Association of Realtors said Tuesday, the supply-demand imbalance will not be fixed overnight, said Kathleen McCarthy, global co-head of Blackstone Real Estate. Blackstone was amongst the big investment firms to buy homes in bulk in the aftermath of the subprime crisis when lenders sold off foreclosed homes at markdown prices. They were buying properties for 30, 40 cents on the dollar. They made a ton of money forming Invitation Homes. The New York firm built a portfolio of tens of thousands of single-family homes, then rented them out through a company called, as I mentioned, Invitation Homes. In 2019, Blackstone exited from the single-family rental business when it sold its last shares in Invitation Homes, which had become the largest U.S. firm in the industry with 80,000 homes for lease. The firm put its toe back in the market in 2020 by investing roughly $250 million to buy preferred equity stake in Toronto's Tricon Residential Inc., which buys single-family rentals in North America. Blackstone's deal for Chicago-based Home Partners shows that the investment firm is turning even more bullish on U.S. housing. The firm is rejoining and expanding roster of Wall Street powerhouses that have acquired single-family rental companies. Canadian property giant Brookfield Asset Management Inc. recently acquired a stake in a landlord that owns more than 10,000 U.S. homes. JP Morgan Asset Management and Rockpoint Group, LLC, also have made big investments in the single-family space. The business is attractive for investors because the growth can come from both rising home prices and rent increases. The S&P CoreLogic Case-Shiller National Home Price Index, which measures average home prices in major metropolitan areas across the nation, rose 13.2% in that year that ended March, up from 12% annual rate the prior month. The rental market showed signs of softness during the pandemic, especially in downtowns that saw an exodus in residents, but lately rents too have begun to rise. Median asking rents rose 1.1% annually in March to $1,463 a month across the country's 50 largest markets, according to a report from Realtor.com. Many analysts say that with home prices gains showing little signs of easing, rents can continue growing throughout the U.S., as would be home buyers are priced out of the sales market and compelling to keep on renting. For their recent activity, big institutional investors own about 300,000 homes, or about 2% of single-family rental homes, according to a report by New York-based financial firm Amherst Pureport Securities LLC. About 85% of single-family rental market is owned by investors with 10 or fewer properties, the firm said. I mean, that is a huge sum that likely is going to start getting turned over to institutional investors. Home Partners, founded in 2012, has a different business model from Invitation Homes and some of the other big firms in the single-family rental business. It gives renters the option to buy at predetermined prices at any time within 30 days' notice. To that end, Home Partners limits its acquisition of new houses to those homes identified by people as ones they would possibly like to buy after renting. Ms. McCarthy said about 20% of Home Partners renters have ended up exercising their options to buy their homes. She said she expects that rate to increase because given rent home price appreciation, many Home Partners renters buying today will likely be paying below market value. Blackstone is buying Home Partners through an investment fund named Blackstone Real Estate Income Trust, which primarily raises money from small investors and tends to hold the assets longer than the firm's opportunistic funds. That strategy is a sign that Blackstone thinks the housing market rally could last for many years. Home Partners chose Blackstone's all-cash after a competitive bidding process, according to Blackstone. The deal is expected to close later this year. So that's pretty substantial. I think we're going to start to really see the growth of smaller mom-and-pop investors handing over the keys to these big, Wall Street conglomerates, Blackstone, BlackRock. A lot of these companies are going to start expanding and taking advantage. They're predicting that roughly 30% of all jobs worldwide will be basically taken out by 2030 in terms of technological innovations, robotics. So there's going to be a lot of change, a lot of capital, a lot of power and money changing hands over the coming few years. What do you guys think about what's going on right now with this transaction? Do you think that this is going to be a growing trend, or do you think that this is likely going to stop here? Drop your comments below, smash that like button, hit the subscribe button as well if you would like to join my live streams. I'm going to go live a few times a week. If you guys want to talk about this tonight, drop it in the comments section. Maybe I'll go live tonight. See you guys in the next video. If you've enjoyed this video and want to dive deeper into the real world of real estate investing, make sure to check out my gold standard program, Cash Flow Burner Blueprint, by clicking the link in the description below this video. We're currently living in very difficult times. I personally believe these are some of the hardest times that we've ever lived in. We are losing, in many cases, our families, our businesses, our jobs, our sense of security. All this is at threat right now, and it's all thanks to the draconian shutdowns that we're all faced to live under. It's times like these that we can see the value in having more than one stream of income. This is certainly not an unattainable goal or something reserved for only a select few. It is the achievement through education and hard work. Now is the time to be relying on multiple streams of income and not just Big Brother. I hate to be the bearer of bad news, but if you think that your pension is going to cover your retirement, you're going to be in for a rude awakening. Don't wait until misfortune knocks at your door. Be proactive and create more security for yourself and your family. One of the best ways you can earn a side hustle today is through real estate investing, something that I've been involved in for over a decade. The strategy is to invest in multifamily homes and live off of rental income through your tenants. These are some of the homes and apartments I currently own and I'm renting out. In my Cash Flow Blueprint, I'll teach you the ins and outs to real estate investing. You'll learn everything about recession-proof investing, real estate versus stocks, different types of real estate investing, how to appraise your own deals so you're not leaning on a third party to tell you what something is worth, out-of-state investing, maximizing your profits, and minimizing your expenses, improving your credit score, different types of loans and which one best fits you and your deal, selecting the right mortgage broker, finding the best deal, lease agreements, and how to find great tenants, and many, many more topics. This is my gold standard program, and in it I put together 1 decade's worth of experience and millions of dollars that I've invested, saving you the time and the money to learn the lessons that I had to learn. To learn more, click the link in the description below this video.